Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq 100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Thursday afternoon, we have Joyce, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq 100. And Brian, it's so interesting, as I was coming up to the studio here where our wall of stocks is, everything was green today. It was a nice change to see with the Nasdaq 100 outperforming.
Yeah, absolutely. It's we've had a lot of red this year, a lot of volatility. Individual stocks, many of them just gotten beaten down quite a bit, and so we've been talking about a potential rally based on improving breadth, and we certainly saw that in the last week and a half or so.
Yeah, and Brian, I think participants are really looking for stocks to put together at least more than one day of green, and that really is anyone's guess at this point. But let's take a look at the charts. Let's take a look at the Nasdaq 100, because price action does make the confirmation at the end of the day. What levels are you watching in the near term?
So let's take a look here. So right now, this is the weekly period chart. We've been harping on these Fibonacci levels the last couple of weeks, Jill, and we bottomed 2 weeks ago at the 50% retracement. Let's call that 3 weeks ago. And for the last 2 weeks, traded right around it. And still about the midpoint of last week, where we bounced sharply higher. So and now we're seeing upside follow through this week. We're about 11% off the lows. That's the most out of all the major indices off the lows. So that's nice to see. And I would just say that going forward, this pivot right back from May of last year, a little over 12 months ago, where we more recently found a brief support in March. That's around the 13,000 level. That's the key level to harp on going forward. So we're just below that right now, within a couple of percentage points of that. I do think we can get above that. And then we'll just have to look to see how far this move can go higher from here. We've seen a number of short-term, these double bottom kind of setups, and I think we're in one of those now. So here was one in March, I should say in January. We had a mini double bottom and we spiked higher. We did not hit the measured move of that pattern. Same thing happened here again in February, March. We retested the lows in March that were initially made in February, did break out above the midpoint of that pattern. We did not hit the minimum measured move there. So I guess that's maybe what you would see in a quote unquote bear market. And so this week we are breaking out of another potentially double bottom pattern. So wait and see if again we can reach that level going forward. What is interesting is when we look at what's within the index, 55% or so of the index is tech, 15% is consumer discretionary, 17% is the communication services. If you look at those individual ones, communication services, which is 17%, we could see this bottomed exactly at a key price level, which was the prior high going into COVID from February 20. And when we came back up above through that initially in September of 20, we broke out above it after a brief few weeks of stalling there. And then we pulled back and retested that level. So the increasing number of times that, in this case, an index responds to a price level, that tells us it's an important price level. And it certainly should prove to be that case this time around again here in late May. That's the communication services. Very similar setup here in consumer discretionary. We came very close to retesting that February 2020 low. And then last week we had the big move higher. We were just within a few ticks from it. So both those two sectors retesting significant price levels. And then here's the information technology sector, which is over 50% of the Nasdaq 100. It's retesting not the 2020 high, I should say the February 2020 high, but a key price level that was initially a high in September and then acted as support all throughout Q1 of 21. So that is where we're seeing the bounce from now. And this level, what will be key going forward, is up around 2580 on the S&P Technology Index. So, and if we look at here at the growth over value, we can see now growth is starting to rise up again, and that's showing the outperformance of growth over value of the last week and a half or so. So definitely it's very short term, but some improving signs for the NDX and for growth stocks and for the main sectors within the NDX.
Yeah, I mean, a number of those stocks that we saw in the Nasdaq 100 were essentially trading like value stocks. So it really was a good deal for some investors out there. And Brian, just to wrap up here, let's get your thoughts on the all-important employment report that's coming out.
Sure. So the ADP number that I think was out this week, and the claims they were not as good, and so it's hard to forecast what we think employment data is going to be. It is a lagging indicator, so I'm not too sure whether it's really good or really bad, how much the market is going to react. I think we're in a period of time right now where the weaker the economic data potentially could be seen as, well, then the Fed will be less hawkish. So bad news could potentially be good news over the short period of time as far as the markets go. What the actual data is one thing, but the market's reaction to that information could potentially be different than what many would expect.
All right, Brian, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.